Welcome to In the Spotlight with Amy's Rose, where we feature great artists, entrepreneurs, community leaders, and, well, anyone who should have that moment to share their story in the spotlight. Hello, everyone. Welcome to a great episode here of In the Spotlight, but this is a special edition. I'm going to switch us out here. Let's see if I can switch us. Maybe, maybe not. There we go. I've had an amazing, incredible career on so many aspects, but a lot of individuals who know me don't realize the background that I really have in the real estate and mortgage community. I started in real estate in 2000, in mortgage actually, and that was a highly competitive time. Rates were high then. I was selling rates that were excited. People were getting excited to get 6.5. There was a lot going on, a big hustle and bustle, and it's been an industry that I've always been very proud to be a part of. Thankfully, I've been able to kind of come in and out at different times, but my relationships and the professionalism of working with real estate professionals as a coach now, still coaching a lot of real estate and mortgage professionals, is why we've come here today, because I have a passion for home ownership, especially when we talk about first-time buyers. And so I reached out to Jeff and Lewis. So a little tee up here. Lewis and I go back about 12 years when we were actually working together in the same company. We've been collaborating for years. He's helped friends and clients of mine that I've been able to bring to him and say, please help them with home ownership. And he's just really an expert in this space. Jeff is an amazing entrepreneur, go-getter, real estate professional in the Orange County area, Southern California. And this is his demographic of his influence as well, as young adults are looking into buying a home. Is it time? Is this scary? So that's a conversation I really want to have today. And I thought you two would be the perfect match to really break through some of these narratives that are out there in first-time home buyers. Welcome, you guys.
Thank you.
Awesome.
Thank you
for having me.
Let's have the conversation. Lewis, first of all, a little bit of your background of working with first-time home buyers. I know it's changed a lot over the years, but I'm sure there's probably some common threads that are still there.
Yes, I've been working with first-time home buyers for the beginning of my career. I started over 20 years ago, and it does change a little bit only because California, especially Southern California, has changed as the market values have gone up, say from like the late 90s till now. But the requirements are still there. So that part has never changed. And what I mean by requirements, the amount that you need to save for a down payment, the credit that you're required to have, certain criteria of number of years you have to have with your some employer. Those things have never changed.
Right.
But there is there is still the strategy of saving, having good credit, and still being able to plan ahead in order to buy a home. And we can talk more in details.
Yes. I want to take it over to Jeff. Jeff, you're clearly a young adult, young professional. So you're having conversations with your friends, your colleagues, just out there. What are some of the narratives taking place around home ownership, especially Southern California, where it's almost discouraging? If we look at it and we just go, there's no way I'll ever own a home. What are some of those conversations that you're noticing in your profession?
Yeah, so a lot of people, when they're asking me about it, they're looking and renting a place because they think it's more affordable, because if you look at the prices of a house, it is really high. They don't know exactly what it takes to get into a house. They think it's cheaper to rent than it is to buy, but really it's more affordable than they may think it is. They just don't know it.
You've experienced rents. They're really not that much cheaper, are they?
No, it's definitely high around here.
And we saw an increase, I remember, especially during COVID, that rents just started jumping up. Individuals' rents started going up out of nowhere without realizing that was going to happen.
Yeah, definitely.
So then how do we start this conversation and say, let's at least look at this. Let's get to people like Lewis. Let's get the right answers.
I think we start with, what is the first steps into looking into buying a house?
Lewis, what do you advise on that?
Well, I think what's going on is that people are starting to realize that there's not enough houses or housing in California. And many other places in the nation, but specifically in Southern California, there's not enough housing. There's more people than there is housing. What you're looking at is owners in California are able to now put together ADUs. So they're building smaller units in their backyards because there's no housing. So rents are going up. So you've got rents going up, and then you've got people who are trying to where interest rates are higher now in this market at the moment. So they're not buying houses, and then the houses that they're finding are priced higher than they want to. So when you see higher interest rates, higher values, what do? What other things can they do? Oh, let's go rent. Well, yeah, everyone else is in that same bubble,
Hmm.
in that same boat. So people are going to go find places to rent. So then that drives the demand of rent up. Well, that's what happened in early 2022. And everybody started trying to basically get out of the real estate market and go into buying rent. But that drove rents up higher, significantly higher. Things are starting to cool down now a little bit, but it hasn't changed that much. Rents are still going higher. And
Mhm.
but one of the things that we've noticed, at least on the mortgage side, is that we've been telling people, look, if you can afford a payment on buying a home, don't focus too much on the rate. Look at the number. Can you afford it? Because the house that you're looking at now, that house is going to be worth more a year from now. But interest rate will go down because as inflation continues to go down, interest rates will adjust lower. Also, historically, on a presidential election year, interest rates tend to go down.
Yes.
Guess what happened in 2024? We have a presidential election year.
Yes.
So that house that is you're looking at right now, if you can afford that payment, you can refinance that rate a year from now or 2 years from now. But that house that you're looking at will not have the same price tag a year or two from now. So what happened is we talk to a lot of clients and they're saying, well, I'm waiting for the housing to go down. I'm waiting for that housing bubble to explode. I just saw recently last Friday or Thursday from CNBC reporting that housing prices are actually going up now again. So for all those people waiting for the houses to drop, guess what? It didn't happen. So and guess what? Rates are still in the 6.5% range.
Mhm.
So if you can afford it now, buy it now, refinance later. So right now, people are still renting. Rents are still staying high, and I don't see them coming down anytime soon.
It's such an important point you made too, because Jeff, I'm sure that you may see this happen where a client may come to you and say, I want to go look at all these houses, but
Hmm.
they don't yet know what they can afford. How important do you
Right.
see it is that you make sure that they are speaking with a mortgage professional and let's find out first, because I think there's not enough education out there and not putting that cart
Hmm.
before the horse.
Right. Yeah, it's very important because if they're looking at a house that's way out of their budget, then we're wasting our time. You don't
Right.
want to get their hopes up for something that they're not going to be able to do. So it's important to know what their price point is so we can start looking in that area.
Louis, do you find that people are actually surprised about what they can afford without realizing?
Yes, like Jeff was saying, it's difficult for a real estate agent. Like Jeff, I'm sure he gets clients and they want to go see a house, but for Jeff, it's very difficult for him to take a client, go look a house, and then they want to make an offer, and then they find out they can't afford it. So
Hmm.
that's the worst thing for Jeff to
Horrible.
be put under. So what Jeff would do is call me and say, "Hey, Luis, can you please go check this? Can you please review this client's profile?" So what we do is I profile the client by first asking them simple questions. Number one, how long have you been employed by your same client? I mean, by your same employer.
Mhm.
Um, we talk about their income. We talk about their credit. So we ask basic questions like this. And the reason we ask about these questions is because the bank that we're looking to qualify them, they're always going to want to know stability of employment. We want to know, for example, how their credit is. Have they established enough credit the last couple of years? Because these are things that the banks will always look into. Why? Because they want to know they have some sort of credit history
Mhm.
of maintaining payments. So for those first-time home buyers, when you're putting gas and using your Chevron gas card as an example, or you're going to Nordstrom's and buying something, making that payment the next month on time, those little tiny little things, even if it's $25, is huge because if you do that consistently as you're using your credit, those things will count importantly when you're applying for a home loan. And your credit score from getting a 650 credit score to a 720 credit score can make a difference in how much you're going to pay annually on an interest rate. It can make a difference from you affording a mortgage payment of, say, as an example, paying $1,200 a month to paying $1,500 a month. So those little things, we ask those questions. How's your credit? How's your income? How long have you been working for your employer? And once we derive all those things and we review your income, we review your credit, then we go through the process of can you pre-approve? And once we go through all that, we find out, okay, this is the maximum you can afford, of course. And then we go to Jeff, and then Jeff, this is how much they can afford. And then Jeff at that point takes over. And then Jeff, you can explain what you do at once they're pre-approved.
Well, as you see, Jeff's a part of a sales team. Looks like he has an associate with us today. Jeff, who's your associate?
This is Cole, who just couldn't sit still for 10 minutes.
Jeff, what kind of questions do you get from potential buyers maybe about programs? Are there really good initial first-time buyer programs? Are people wondering about down payment assistance, things like that?
Yeah, I get a lot of, like, is there down payment assistance? What kind of credit score? Just, things like that. Like, am I close enough? Like, how is my credit going to look? How's it going to affect? And then what kind of money am I going to have to be able to put down?
And those programs, for example, Amy and Jeff, just to kind of give you guys an idea, there's so many of them. I mean, I could keep talking about all those kinds of programs that are out there, and we could be here.
Which is great, Louis, because a lot of people don't realize that they're even an option. They just go, no, I'll just keep renting until I have $100,000 saved.
Right.
So I'm glad that we're addressing this.
So there's a lot of programs, but I will tell you one of the most common programs that's out there. It's called the CalHAFA program. And there's a program there that basically you can get up to 3.5%, where that is a down payment assistance program. So they will grant you a 3.5% down payment available to you. And then what also they have an option for you to also help you with some of the costs that encompasses part of the loan. So in other words, when you're doing a loan, the bank will help you with the loan. Then the state or CalHAFA will help you with the down payment. But in addition, there's cost involved. So there is even an additional grant to help you with some of the costs. So all of this, if you start adding it, will help you with the overall cost and down payment. The down payment, there's a very, very small percentage that is that's a charge for the down payment, but it's extremely small. And then you don't have to pay it back until you decide to either sell the house or refinance the loan down the road.
That's
but
huge.
It's available. But that's available now. There was a program that recently came out in April. It was California Dream that allowed you to actually get 20% of the down payment. But it was so popular that it lasted less than 2 weeks.
Wow. I'm not surprised.
Yes, because again,
Incredible.
the demand for it is so huge in California. And it was one where basically you borrow 20%, basically get the down payment, but the state basically was also going into it where after several years, if you decided to sell the house, the state would you would give the state back 20%, but then the equity you would build, let's say you build 100,000 equity, you would pay back the down payment, plus you'd give 20% back to CalHAFA, and then the rest you keep it to yourself. It was a win-win program, but it was gone in less than 2 weeks. So literally, we were taking applications, but they were gone. It was supposed to hopefully last longer, but it was that popular. But CalHAFA still has that program for 3.5% down. You can use it as a conventional loan, or you can use it as a FHA program.
How much is that opening up more opportunity for especially first-time buyers, which I always say are young buyers, but there's first-time buyers of all ages, but really thinking about our young adults that maybe have been discouraged. How much is this pushing that envelope open further for them, even with high house prices?
Yeah, it's still available for a lot of young adults still looking to buy homes. For example, if somebody wanted to buy something in the 800,000 range in some of these high-end places, you can still buy an 800,000 with 3.5% down. It all really
That's
comes
huge.
down. It's huge.
I came into this business in the early 2000s. That was not the case.
Yeah. It's huge, and these rates, in most cases, are running right now in this market. They're running in the low 6% range, so it's actually not a bad rate. The
No.
other thing is that FHA mortgage insurance have come down significantly, so it makes
Huge.
the overall monthly payment lower. So there are some incentives for first-time home buyers, especially those getting the CalHFA FHA program. So there is a lot of incentive. The biggest hurdle right now for a lot of first-time home buyers is their interest rate.
Mhm.
And the reality is what happened in 2020 and 2021 was not normal.
Right.
Those were the lowest rate in history.
History.
Hmm.
In history, we may not, it's likely that we will never see those rates again in our lifetime. But in history, there was a time when we had interest rates in the 18% range.
Yes.
It's likely we will also never see those rates again in our
Right.
lifetime. So where will we see interest rates between now and the presidential election year? We probably will end up, if I had to guess, we'll probably end up settling down somewhere in the mid fours to low 5% between now and then, somewhere in there, and that's probably going to be the norm. So I think that's really now the reality is we need to get used to the
Yes.
real world,
And
and when
stop
we
Hmm.
do
paying those
that, then I
exorbitant
think
rents.
but in the meantime, while we're trying to realize and get used to that normality, prices still keep going up because there's not a lot of inventory in California,
Hmm.
and prices will not go down unless some crazy, you know, natural disaster happens. We just don't see that happening.
Oh.
You Again, look at the inventory. There's not a lot of houses in the market.
Right.
But when we want to have first-time home buyers, we also want to help the real estate agents like Jeff and other business partners. We need to do our job on the lending side to help those clients and first-time home buyers. But there's still a lot of other programs. I just focused on one of many others.
Right, right. But it's incredible having this conversation, and we're going to be doing this again because I love this conversation, and I think there's not enough of the information out there. We might see a quick commercial or flyers here and there, but actual candid conversations where we kind of put you in the hot seat, and I appreciate it so much, Luis. I've known you for so many years. You're the most
Hmm.
just trustworthy, educated in this space of any professional that I know, and I would hand you to my own children if I had to because I trust you that much. Jeff, I'm kudos to you for being a young entrepreneur going into this real estate space,
Hmm.
especially in the
Thank you.
time that you're in it. That's a lot, but we need more of you as well because we don't want that, older realtor image that's kind of out there. A lot of wonderful seasoned
Right.
professionals, but we need some fresh faces out there influencing your generation to say now is the time. Are you noticing any conversations around maybe young professionals like yourself coming together and maybe buying together so that you can at least get in that game and start building equity?
Oh, absolutely. I've talked to plenty of people who they, if they can get into like a duplex or something going on with a person with a duplex or something just to get their foot in the door and then start in that direction. That's absolutely something that I hear a lot around.
Louis, what are your thoughts on that?
What's interesting is that programs like the one I just mentioned, the CalHFA FHA program or conventional, you can get a CalHFA owner occupied for 2 units or 4 units. So you can do that. I mean,
Huge.
you can get very creative. But I always tell clients is that don't limit yourself on what you can do. But what's important is always be straightforward. What is your intention?
Hmm.
What is the direction you want to do? Because whether it's a first time home buyer and you have a down payment, just always be straightforward because whatever that may be, you may have the down payment, but maybe you don't have the income to show on your tax returns. Well, guess what? I can find other solutions. Sometimes we
Hmm.
have programs like bank statement programs where we can use
Mhm.
the deposits to use as
So
income.
happy those are back.
Yeah. So we have those programs. Another example, I've been working here internally at Prime Lending is that there's a lot of clients that we are starting to find that don't have Social Security numbers. They have what we call ITIN. So in other words, maybe they've been working here, filing tax returns, building their credit, but they don't have a Social Security number. Guess what? We're in Southern California. We have a
Mm.
lot of Hispanic, Latino community, and
Mhm.
they pay their taxes, but they have the down payment. Guess what? We offer those programs. So opportunities for Jeff to be able to help clients in a position to that have the down payment and can qualify for a loan. Guess what? We can do that. So we can help all types of
Wow.
first time home buyers.
Mhm.
So
Not limited to just 3.5% down. There's a
right.
bunch of opportunities, and whether they have the taxes or they're self-employed and maybe they don't have the taxes because they're taking the advantages given by the government to deduct, those opportunities that are allowed. So we have alternative opportunities for them, and so I think there's just a matter of educating the consumer. But what we're finding is a lot of them are not educated, and there's a lot of loan officers out there that don't educate their clients. And I think this is what this platform is allowing us to do that, and also educate the business partners.
Completely.
So
Because then, Jeff, for you and your other colleagues out there in
Mhm.
this space, you can say, no, wait a minute, we may have a solution. And another question I had creatively as well, especially when we're dealing with young adults and younger first-time home buyers, can they receive gift funds? Let's say there's a family member that says, well, I can put 5,000 in on this. Can they receive maybe some of those down payment assistance and still have a gift fund so that they can make this dream happen?
yes, they can have gift funds. In most cases, they can have a large gift funds as long as the person who's going to be on the loan has at least a partial amount of the down payment coming from
Okay.
them. A lot depends also on the lender, and that's kind of where the experience of the loan officer comes in,
Mhm.
because there could be so many. I mean, there could be endless amount of products. So the lender has to be, or the loan officer has to know the guidelines of each one, because everyone can change. But for the most part, yes, you can do that. You can definitely gift money. And in most cases, if you put 20% down, it doesn't matter whether it's coming, all of it's coming from the family or not.
It sounds like Jeff has the fun end of this system because he identifies those in his sphere that are ready to take this next step.
Mhm.
And then, Lewis, you have to go through mounds of programs and paperwork and work to put that together to see which program is best and make this happen for them so that Jeff can then go identify the property. Am I right with that order of things, that you are the one with
Yes.
the mounds of paperwork?
Well,
That's
I'm
why we
so
love
glad.
Luis.
I'm so glad that you brought Jeff in, because I wanted to let Jeff and anyone else who's listening to this today is that, we run into so many people that are not necessarily first time home buyers, or maybe that are first time home buyers, but maybe you have, like, for example, doctors or people that were salaried, right? And then they decide, for example, hey, I want to buy a house for the first time, but it just happened that maybe a doctor decided to leave the hospital and go on their own practice, right? So they were salaried. I'm just
Mhm.
giving you a random
Sure.
example. A
Mhm.
doctor decided, hey, I don't want to work with this hospital anymore. I want to go my own practice.
Self-employed.
So they just went from a 5-year practice, working with a hospital, and decided to go on their own practice. So from a regular bank, guess what? I can't help you because we need at least
Two
minimum two
years.
years tax returns, right? But here's this house in this market that is like priced well, and they want this house, and there's no way they can like pass on this, but they don't qualify. So what do you do? Jeff's like, I got this guy, he wants this house, blah blah blah. What do you do? Well, guess what? If you know the right person who is an expert, and there are several really good expert LOs out there. I'm not saying I'm the only one, but we're talking here today with me.
Yes.
But
Mhm.
guess
I
what?
chose you on
We
purpose today.
have,
It's okay.
there is a program. We have a program that allows somebody to be able to put as little as 20% down with no income verification, but they have to show that they have the money in the bank of at least 12 months reserves or more. And we don't need to know, we don't need to show any income. And they just have to keep the loan for 1 year. So that means that person can be waiting for just 2 years tax returns to basically have them. And then as soon as they finish doing their 2 years tax returns, they can go and get a regular loan, come back after that, and we'll refinance it in a regular 30-year fixed loan.
Brilliant.
Well, guess what? they got the house that they wanted. Because again, what did we say? That house is probably going to be worth way more
Right.
2 years from now or a year from now.
Right.
So I'm giving you an example, of what kind of circumstances that can happen that can help people like Jeff in this industry where you don't have to lose a client. And if you're a
Right.
client out there that's going through a profession like that where you're switching from salary to self-employed, you don't have to feel like you're losing out. I've
Mhm.
heard these stories for many, many
Yes.
years, but the industry in the mortgage side is changing, but you have to educate the consumer.
Mhm. That's Jeff, how much easier does this make your job when you know that you can have these kind of conversations with potential home buyers?
Oh, it makes it way easier, especially with someone like Luis in my back pocket, who, if I have a question, he's always right there for me. It definitely puts me at ease, and it makes it way easier out there.
I love the ambition to really change the narrative on buying a home and what that really can mean, because that's literally that wealth. It's still the best way to establish yourself, have ongoing asset and wealth. Being a homeowner is the American dream. It just is. And
Hmm.
I've loved for 20 years working with young professionals in both the real estate and mortgage side. And I've seen the passion, I've seen the heartaches. We've seen the industry go up and down. I've been through the recession, all of that stuff, but it always comes back with the same enthusiasm, excitement. And there's always new professionals saying, I want to be a part of that. And I just feel that the key to that success and the longevity, and for Lewis, I know it's been for you, and Jeff, I know it will be for you as well as a young professional, is that enthusiasm and doing this and saying, I'm helping future homeowners. I'm helping
Hmm.
people have a piece of that dream and giving them hope. And I think there's just an excitement to that. Lewis, do you love every closing? I mean, does it just like you love every family you've helped?
Yes, absolutely. I think one of the reasons I'm still in the industry is because I get the satisfaction that I know I've made a difference,
Yes.
that I've impacted people's lives. I think one of the sometimes don't get me wrong, some clients can be very challenging just because it's so they're passionate too. And sometimes it's difficult, especially first time homebuyers. It can be very difficult to go through because they're going through their own stress. Maybe they're moving out of town. I had one client who was moving from San Diego to Houston, and it was hard. Was I think she was, I believe, 29 years old. Her mom was a real estate agent, so she was helping her. And I could tell the stress level was getting much, much bigger. And her and I had great conversation, but I could tell the stress level was getting much, much higher. Ultimately, we closed the deal. She moved to Houston, and I went to go see her at the bank where she worked. Like literally, like days before she was flying over. And even though it was a difficult interaction towards the end, I knew where she was coming from. But walking in there and seeing her smile, and just knowing that she was ecstatic, and you forget about all the stress that she went through, or the interactions that maybe were very stressful during the middle of the transaction, and all that. The last image I had of her was that she was ecstatic and happy,
Mm.
and that made the difference. And next thing I know, I saw on my LinkedIn she posted this great story about her experience with me and the transaction. And I wasn't expecting it, but the investment was on her experience at the end. And so
Yes.
I always look at it like I always spend the time that needs to be done in the client. And if I invest that time, I always look at it as an investment, because if she liked that, if I invest that moment and those times with her, then I'm hoping that maybe if she likes that experience, she will refer me clients. And guess what? It wasn't that big of a loan. But guess what? I don't know if that loan, that referrals that I will get down the road could turn out to
Right.
be big loans. So I work just as hard for $150,000 loan as I will work for a $3.5 million loan.
Right.
If you ask any of my colleagues or anybody who works with me, I work just as strong. And sometimes it's frustrating because they're like, it's just a $50,000 loan. But it's not about the loan amount. It's about making sure you take care of that client. And that's what that's the satisfaction I get, is to make sure that they're satisfied at the end.
You know, I think if we have so many different national days, like we even have a national ice cream day, why do we not have a national real estate and mortgage professional day? Because you guys deserve to have your own day with its own color theme and its own memes all over social media. But I think we should make that happen. I think there's a way to actually make something like that happen. I might make it a new mission.
Amy, I think you should come up and produce a mortgage. They already have a real estate reality show. I think you should produce a mortgage reality
A
show.
mortgage reality show? God, that would be
Mhm.
amazing. I will start my producer hat will start working.
There you
Jeff,
go.
Jeff, do you have any last questions for Lewis or any last thoughts on I know it probably feels like this huge mountain that you're looking at with helping
Right.
young homeowners with the discouraging messages that come through media. Any last questions or thoughts that you have on changing that narrative so that you can put more individuals in homes?
That's a tough one, putting me on the spot like that. I can't right now. I can't think of anything at the moment.
It's okay. It's a lot, but
It's a loaded question.
it's a loaded question. It really was a loaded question, but that's okay. We appreciate the bold moves that you've made to
Mhm.
be in this space. And I hope that this has answered a lot of questions. This is why I do this. This is why I love turning on the camera and
Mhm.
creating these conversations, because hopefully if you're watching this and you're hearing this, share it. Share it with someone you know that maybe didn't realize that this isn't
Mhm.
grandma and grandpa's banking situation anymore. That you don't have 20% down, you're not buying a property, and so you just have to wait. That's not the case. And I think, Lewis, you've done a great job of changing that conversation today, that there are creative programs so that we no longer have to pay these exorbitant rents, but maybe let's start helping get our young adults actually have the same dream of owning a home.
And just one last thing, and this goes to Jeff too, and anybody watching this today, is that one more thing, especially on those first time home buyers, if you're a veteran,
Mm,
active
Mhm.
military, guess what? You don't need a down payment.
nothing.
Nothing. And also if here in Southern California, we have a big population of veterans and active
Mhm.
military. So this
And the
Jeff,
loan limits have gone up, haven't they? Haven't those VA loan
yes,
limits
so
so where it's doable?
absolutely. So Jeff, I know you want to help so many families. I mean, there's a lot of veterans
Mhm.
that are and young veterans, excuse me, young active military people that are not aware of all their
Mhm.
opportunities. So this is also an opportunity, and I'd be more than happy to help you and anybody who I am very much an expert on VA loans too. So any military families that I can help, I mean, I'm gun ho on those two, and those are also one of the most proudest moments I have is when I can help military families. So
I love it. Good stuff today. Let's get more buyers in homes. It's
yeah,
time. I
yes.
want that to be like hitting the media. Like, wow, new young homeowners are finally saying, we're not listening
Mhm.
to the negative news. We're not listening to the doomsday. We're going to have that American dream. And I love the conversation about maybe doubling up. Find your best friend. Go in this together. At least get in
Mhm.
the game.
Right.
Get in the
Yes,
game.
that's actually one of the smartest thing is that right
Partner up.
now, if you have friends, young people, middle aged, whatever it is, if you can team up with friends and go for it, this is the perfect time.
Awesome. Thank you both. And thank you to your young assistant over there, Jeff. We liked meeting your assistant that you have. Lewis, thank you so much. And as a fellow Rotarian, thank you for all the service that you give to so many all the time. And we will come up with another great topic helping our young homebuyers on the next episode here of In the Spotlight featuring our Morgan real estate professionals. We'll see you again next time.